Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi, kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kak Aini? Maru? Amay?
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja diam tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that
The lotus doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty,
untouched
touched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Hi, morning everyone. Welcome back to Morning Cup by 8. Aiman here. Okay, so if you look at the S&P 500, well, it finished significantly higher on Friday session, even though the NFP data was postponed. So the index, closed at 6,932 points, which went up by almost 2%, at 1.97 percent last Friday. So yeah, the market is trading with relief as investor bought back into the tech stocks. After the US government shutdown ended, which pushed the NFP release date to this week, Wednesday. So yeah, with the data raise now moved to a new date, today's price action looks like a bargain hunting and also the technical rebound. So expect a positive open for the next session, but the volatility, I would say, will likely return by midweek this week on the job data release, right? So yeah, for this week, so all eyes on the job data on Wednesday, followed by some GDP numbers to be out on Thursday, right? And also, let's monitor closely on some of the inflationary CPI data on Friday for the US market. Right. So for the China A50 futures, if you look here, right, we'll finish lower on Friday session. Well, I mean for the main session, right? Even though it staged a strong rebound in towards the evening, right? So yeah, the index closed the session at around 14,800 points. Yeah, I think the uh, market is now trading with high volatility as the investors initially saw off the Friday due to global tech rout, which also before this aggressively buying uh, during the night session, right? So I think with the sentiment flipping to the risk on overnight, I think today's price action to look into the the bullish move. So yeah, I think the catalyst was also from the NFP data this week, which also removed the immediate economic fear and also triggered the massive short in the tech stock, pulling the Chinese assets up, in the night session. So I expect a significant bullish move to continue today as the market price in this positive, global shift. So for the Hong Kong trading stocks, we published today, right? So we have Li Auto, stock code 2015. So yeah, the stock is on its breakout formation and breach above the $70 70 Hong Kong dollar resistance level, right? And if the bullish momentum to remain steady, we can expect it to test the next resistance at 75 dollar before it might climb higher to test the next resistance at 80 Hong Kong dollar level. Right now, if the momentum to reverse, make sure to have a stop loss at this 65 Hong Kong dollar, as it indicates a possible change of trend, which might also, affect your trades. So next we have Zijin Mining, stock code 2899, and if you see here, the stock is now eyeing to climb higher after this rebound below the 21-day moving average. So now if the price is able to continue to maintain higher to reach above this 40 Hong Kong dollar, well, it might propel towards the 43 Hong Kong dollar together with 47 Hong Kong dollar level. So a reverse below 37 will open the door for a deeper correction and shifting the trend lower. So for Hong Kong trading stocks, we have one breakout stocks and one pending breakout stocks for Zijin Mining. Right, for the WTI crude oil futures, well, it finished higher on Friday, even though it faced a small selling pressure, right, in the session. So the contract closed at somewhere around $63.5 dollar level, which went up by 0.65%. So I think the market is trading nervously, but finding support somewhere around the 200-day moving average, as investors realize that the US-Iran talk in the Oman did not immediately solve the conflict, which also keeping the war premium alive. Yeah, I think again the NFP data is actually postponed to Wednesday, right? And the immediate economic risk was also removed. So yeah, over the weekend, this U.S. Announced the new sanction on the Iranian tanker, even though they said that the talk was okay, which reinforced the tight supply narrative. So I think for this WTI crude oil futures, expect a firm opening at the opening session later, as the geopolitical risks remain the dominant uh um what you call it the dominant driver, right? So we still see a positive move could flow into the coming session, keeping our positive trading bias unchanged. So for now, we keep our resistance at $68 level, together with $70 level for the next resistance. Right, into our local market, our Malaysian market, well, the KLCI finished a little bit higher on Friday's session, even though the FKLI futures dipped slightly. So I think the index closed somewhere around 1732 points, which went up by 10%. Sorry, 0.1, 0.1%, right? So the market was also trading cautiously and staying range bound during last Friday's session. So I think the price action looked like a bit defensive, you know. Yeah, so over the weekend also the Wall Street surged to historic high, which also the Dow Jones broke the 50,000 points level after the regarding some of the economic data, right? So yeah, I think the market is a bit of mixed bag for now. We are seeing some of the steady performance in banking stocks or banking sector, specifically for the public bank moving up, right? Uh, but CIMB, experienced back together with RHB and also Bank. So on the industrial side of things, industrial sector, there's some positive momentum coming from the Gamuda, the Sunway construction, Suncon, right? However, it's suffered day for the tech and also transport, as the Maiji and also Asia X are currently trading in 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 red. Yep. So it's like it looks like the investors are rotating their focus towards the construction, the utilities, right? For now, we're staying cautious on the high growth tech play. So for the Malaysian market, I think we still expect strong bullish move in the next coming session, as the market would likely to play a catch up to this massive shift in risk exposure. So for uh, FKLI traders, right, we still keep our positive view or positive trading bias for FKLI, riding on the positive sentiment for our local market. So last Friday, most of the sectors remain on red, while only some able to maintain its gain. So today, if the positive sentiment to get a bigger exposure, we potentially to see a rebound in most of the sector lah, right? So yeah, a bit on Gamuda as well, technically, right? Like what I've shared to you guys earlier last week. So I shared that the bullish structure is losing momentum, but do focus on 4.05 together with 3.80 support level. Also, do note that the RSI now have a huge potential to show a bullish signal here, structurally, where it may rebound higher from this 30 level, and also the price to rebound higher from the 4.05 support. So let's see if any sizable of volume may kick in and give the stock some hope to breathe, but again, do watch out for the 4.05 level, key level, and also the 3.80, where it might actually derive from the Fibonacci retracement level right here. Also, I believe that Adam will explain more to you guys after this, and see how's the fundamental view for Gamuda. So stay tuned, guys. Right, for the Malaysia trading stocks. So today, recently, I've been always mentioning about the banking stocks, right? So we have Alliance Bank today. It's in its breakout formation higher at 530 level on a strong volume as well. So with that, we expect the momentum to keep bullish and the stock able to propel higher to test next resistance at 560 cent, followed by 590 cent level. So if the stock to clear below the 5 ringgit support, this could reverse the course and trend the stock lower. Also, next we have Great Technology, right? So the stock is also experiencing the stock is experiencing a pending breakout at this 1.75 level. So if the stock to remain bullish, we expect the price to reach somewhere around 1.85 level in the coming session, with high volume as well. Second resistance is at 1.95 level. So keep an eye at the 1.65 level for any attempt of reversal. So we have one breakout stocks and also one pending breakout stocks for Malaysia stocks. Right, and lastly, for the FCPO, well, it finished lower on Friday, even though the global market rallied, right? So I think the benchmark contract closed at somewhere around 4154 ringgit, which went down by 1.24%. So the market is trading cautiously as investors liquidated some of the position to reduce some risk ahead of the MPOB data release this tomorrow, right? So I believe that the traders lack some of the fresh catalyst and track the weaker dealing palm oil lower. So also early estimates over the weekend suggest that January production to fell by somewhere around 10-15% lower, right? Which also should provide some floor to the price near somewhere around 4,100 level, which is our stop loss. So expect a quiet and also defensive opening in the next session as the market waits for the the official figure, right? Right. So I'll stop here and pass you to the next presenter. Thanks, everyone.
Thanks. So good morning, everyone. Please allow me to share my screen. So good morning, everyone. So as what we actually published in our last week weekly slides, so we are seeing that there is improvement on the global risk appetite recently. So as the global risk appetite pullback was actually short-lived, so we do seeing that investors likely to take on more risk into these weeks. So the reason why there is improvement in the global risk appetite is because investors do stay optimistic on the overall global growth, first of all, and we're seeing that there are some easing of the recent risks, such as the resolution of the US government shutdown. Second, dissipating geopolitical tension risk following a friendly conversation reportedly between Trump's Xi on trade and geopolitical flashpoints. And thirdly, Iran also confirmed planned negotiation with the US, which have likely supported the risk appetite as per last week. So should these trends continue, we expect risk-taking to persist and hence reinforce our view on the overweight on equities and the rout in safe haven metals to continue, with silver likely to move south faster as well. So please pencil in 13 February in your calendars, where we are seeing that the funding for the US Department of Homeland Security will cease. So even as the partial US government shutdown ended earlier as last week, so investors will continue to monitor how the decision may evolve, while any prolonged disagreement may be negative for the financial markets. So we think it will be modest and short-lived, accounting for the fact that the government shutdown is clearly averted, while the DHS funding may have little imperative for investors' decision. So over to Australia, on last week, we are seeing that the cash rate, which is the policy rate in the Australia, has been increased by 25 basis points to 3.85% by RBA. So first of all, so we are seeing that the inflation has fallen since 2022, but picked up materially in the second half 2025. So broad wage measures and unit labor costs remain high in Australia. Inflation likely to remain above target for some time, which is one of the reasons why they increase the cash rates. And secondly, so private demand stronger than expected in Australia, driven by household spending and also investment. So while the labor market has remained slightly tight, while unemployment is lower than expected. So based on the policies statement itself, inflation risk is to be eyed closely. Rate hike necessary to limit the price increases. So our in-house view think that the RBA will likely hike again as early as July 2026. So on the global equity fronts, on year-to-date basis, global equities has rose by 1.7% on year-to-date, but inflationary risks are now more observable, with crude oil at 13% year-to-date growth. So do note that there's a sell-off in the tech stocks globally. So global equity futures has dropped, with Nasdaq declined by 1.5% on year-to-date basis, led by AI and robotics TR, which declined by 6.5% on year-to-date basis. It remains to be seen if it is an isolated case. So the spark of the sell-off was a new rollout of a new AI tool for legal work, which is seen as a development bet to spark other tools for sales, marketing, and also finance. So closer to home, we are seeing that there is a release of the Malaysia manufacturing PMI as well as last week. So where the global manufacturing PMI for Malaysia inch up further to 50.2 basis to 50.2 points, in January 2026 versus 50.1 points in December 2025. So marking a third consecutive month of expansion and also the highest reading since May 2024. So underpinned by rising output and also stabilizing demand. So new export orders increased for the first time in the 5 months of the fastest pace since July 2024. So alongside a modest rise in manufacturers' purchasing activity. So sentiment on output prospects rebounded sharply, marking the second highest level since October 2013. So the recent robustness in the manufacturing related and also trade related indicators, so including a surge in the exports for December, and also continued robustness in the IPI data, where we're also seeing that the December IPI data, which is scheduled to be released today, to remain robust at 4.5% growth. And also lastly, the continuing expansion in the manufacturing PMI do reinforce our optimistic view for the manufacturing sector for this year and also the upcoming months as well. So we are seeing that the manufacturing sector is expected to continue receiving support from firstly, sustained strength in domestic-oriented industries, easing tariff-related risk, and also continue resilience in the E&E exports as well. That's all from me. I will pass the line to Adam. Thank you.
All right. Good morning, everyone. So today we have a company update on Gamuda. So it seems that there has been in a way a timing mismatch in terms of the jobs on hand by Gamuda, whereby about 60 to 70% of Gamuda's outstanding order book is related to projects which are at the very early stages, like 10 to 20% of completion rates. So this basically means that it would need a bit more time for Gamuda for these projects to move at a higher level of the S-curve before they can really contribute in a meaningful manner. And also one thing to bear in mind is that at the end of last year, there are a few projects, particularly the ones from Australia, such as the Sydney Metro West Tariff Package and the M1 Motorway project, which is basically nearing completion. So, in general, when the project is nearing a completion and at the same time, the bulk of the new projects, the bulk of the outstanding projects are still at the very early stages. This basically means that there's not really much to recognize now, but it basically means that it may require, some time before higher recognition can be done. So it's all just a matter of a timing issue, and fundamentals remain well intact. And in terms of their target to reach the 50 billion ringgit outstanding order book by end of calendar year 2026 remains intact, given that they have around 10 billion Aussie dollars worth of active tenders on hand, and not to forget other domestic upcoming projects such as the Sabah Water Supply Scheme, and perhaps we would slightly see maybe the Perak Penang Water Transfer Project that may likely be awarded sometime this year also. So those are all intact. And another thing to bear in mind that the DC story is also remains bright, given that on top of having already securing data center projects from Pearl Computing Malaysia, we understand that Gamuda could stand a chance to get new data center projects, maybe from other hyperscalers, given Gamuda's IBS expertise. So all in, we are actually reducing our FY 26, 27 and 28 earnings by 12 to 14% to be more conservative in terms of our timing recognition of the ongoing projects. And because of that, we derive a new target price of 6 ringgit and 26 cents, previously 7 ringgit. But as of now, we observe that the levels at which Gamuda is trading now, which is between 16 to 17 times forward PE, is a rather, I think, attractive level, given that other key construction peers like Suncon are trading higher at about 19 to 20 times. So that's about it today for Gamuda. Thank you everyone for dialing in into RGB Morning Kappa at 8. We'll see you at the same time and same place tomorrow morning. Till then, take care and have a good trading day. Bye-bye.